Hi guys, let's see Bollinger Bands. So Bollinger Bands are bands drawn on price chart. They provide definition of highs and lows of current prices. They help us measure volatility. So a quick disclaimer, price action is the king. There's no substitute for price action. Bollinger Bands being an indicator are also derived from price. So let's see some history about band-based indicators before Bollinger Bands. So these are like three bands which were like very popularly used, be it moving average person channel, kilter channel, Donchain channels, which was like most popularly used by turtle traders. And maybe we would also explore this in future. Some of them really give very good entries, but then there was a problem which was observed, that is like price going away from the band, and there were like the entry exit signals were sometimes misleading and the stop loss were very deep. We will explore when we are exploring that in detail. But then there was a solution for this found by John Bollinger. So he identified the problem as volatility and came up with a solution. So that solution is the Bollinger Band, most probably we know now. So the solution was the bands expanding and contracting based on volatility. He measured it through standard deviation. So what happened is he wanted a band which expands and even contracts when there is a less volatility and expands when there is a chance of high volatility, and it adapts. So basically he is quite active on Twitter, and he has written this book Bollinger on Bollinger Bands, and according to according to John Bollinger, the definition for Bollinger Bands would be: Bollinger Bands are bands drawn in and around the price structure of a chart. Their purpose is to provide relative definition of high and low prices. Actually, John Bollinger is very active, and if you mail him, he mails you back with whatever. So this is his mail ID, and maybe you can ask your doubts about it. And he also has his own courses and toolkits, which, in case you guys are interested, you can explore. When you choose Bollinger's as like Bollinger Band as an essential tool, then you realize that it is really very powerful. But the thing is, don't switch around many indicators. Choose one indicator. I at sometimes feel sometimes even candlesticks are very powerful, more powerful than indicators. I used to extensively trade in candlestick only. That's like pure price action. There are few edges in indicators, but yeah, once you start training your eyes with the naked candlestick, that would be more powerful. So again, coming to the bill specification. So Bollinger Bands are made up of these three specification basically. That is, first is like 20 period simple moving average. The next is two upper and lower bands. That's like which is powered by standard deviation. So let's see each of this in detail. So the first is 20 period simple moving average. It is nothing but averaging the last 20 candles close price. So that gives us the mean. Mean is basically the average. So when the price is above average, it generally means bullish, and when it's below average, it means bearish. So the upper and lower bands acts as resistance and support. Upper as resistance, lower as support. So these are plotted using standard deviation. So what's standard deviation? Standard deviation is nothing but measuring the deviation of data from its mean. In this case, the data is the price. So if at all it's a bit confusing, I tried to reduce the definition from Google a lot. Let me try to make this part more clearly, because once we understand this, we ourselves can build a lot of system using our Bollinger Band. So these are 10 students' marks from a class. When we sum it, we get this number. And when we divide it by the number of students, we get average. So average is nothing but the simple moving average, or the what you call the mean. So this is the mean. So from mean, what is the difference of this? That is standard deviation. That's like 98 minus 95 is 2. This is like this particular student is 2 standard deviation plus 2 standard deviation, and this is 93. So this is like this particular student is minus 2 standard deviation. So this is what standard deviation is. So once you understand this concept, it makes things very easy. So let's see this in bell curve, normal distribution bell curve, and we'll try to understand what actually deviation is. So this is like if you take any data sets, maybe in your class or anything, we can just find that if at all, if at all the class has an ideal data, or almost 80% of the class which we take, or else like in this case 68.3% of the class we take would belong to this category. That is like if you have 100 students, 68.3% of students would be near the mean. That's like one standard deviation apart or minus one standard deviation apart. There are few students who would be very like they would be toppers of the class, and there can be few laggards. It's the same case with almost everything. And if at all there is something some student going here, then there is something we know that, right? He is not in the average. He is doing something different. So basically, it's something in the price also. When price mostly would be near the mean, but when things go to standard deviation, either they will come back to mean, or they go away from standard deviation, they come back to mean, or else if they go here, that's like they are making the new path. That's like they are away from their average. So this plays a huge significance. So basically, let's also see in chart to interpret it. So let's open trading view. So this is HDFC's pure price chart, where we can see just candlestick, nothing else. To add indicators, first we need to go to indicators and we need to add Bollinger Bands. So this is Bollinger Bands. This is how the whole thing looks like. See, generally, still now what we had learned, when the price is above Bollinger Band, it is said to be bullish, and when it is below, when the price is above the 20-day moving average, it is said to be bullish, and below it is said to be bearish. So what's happening? It's basically breaking the 20-day moving average and coming down from the resistance point. Okay, so let's see the construction of this in the settings. See the settings, as we saw, it's a 20 period simple moving average. That's the length. You can change it, but usually even John Bollinger had said that changing this doesn't work much. But if you change it, there is a different setting for standard deviation also. Like if someone prefer 50 moving average or something on the lines of it, it's 1.9 or some standard deviation, which John Bollinger has indicated. You guys can research on it if at all you need it. So the next is standard deviation. As we know, we would be looking at two standard deviation. That is like two standard deviation of 20. So style wise, the basis is the middle standard deviation. This is upper band, this is lower band, this is background. So upper band, since it's a resistance basically means we will try to sell here. But the thing is, guys, if there is a blast, don't try to sell it there. That's a strategy in itself, and that gives a very good money. If you wrongly do it, then we would be in a huge pain. So bottom is green. So this is Bollinger Bands. Let's try to so we saw the specification of Bollinger Band, right? Like 20 period moving average, upper band, lower band, and standard deviation, two standard deviation. So generally what happens is like when price comes here, it acts as a resistance, and when price comes here, it acts as a support. There are times when it goes out, so it's like it's away from its standard deviation. So when the price is away from its standard deviation, there can be many possibilities. One is that price has completely taken a different path, or else price has temporarily taken a different. That's like two brothers who don't want to be apart, and when they go apart, they try to come to their home back. So this is how we can interpret it. And so generally, when you look at the band, when the volatility is high, that's when the band expands. And when they are low, that's like they are trading in a smaller range, like now. That means they are like contracting. So if at all there is a blast, this side or this side, then watch out, there can be a very bigger target. So, but we don't know what sentiment is happening, but let's see how things shape up. There are many strategies in Bollinger Bands. So mostly we would be looking at this first three strategy, which I will put it in the next video because I had this feedback coming up. The videos are very lengthy and no one are actually watching it. So what we will do is we will just end this video here. So but the thing is, you guys should understand this concept very clearly. When we understand only this way properly, we can trade a lot. We can make our own systems also. John Bollinger himself has a lot of trading system. Maybe let's see in future if at all someone is interested to learn about it, and if there is really in depth, you can actually go learn it from John Bollinger. Or else let's see if at all time permits and we really are interested and we master this pattern, then we can go to the next part. Next part would basically look like this. I have generally put what those are and how to interpret it. I had made the whole PPT, and you see there are like lots of patterns. This all are from. There was a guy called. I'm not getting his name. Some Daniel or something. So he also found this, and there are a lot of things in Bollinger Bands only. So also, if at all you are using one indicator, please use that indicator. And if you are trading using one system and it's profitable, please do that. There are many trading systems and many things. They can just confuse you. So a quick recap. So Bollinger Bands are bands which tells at any particular time what highs and lows are, and then they help measure volatility, and then they are band based indicators. The problem being volatility, which was identified, 20 period moving average, upper, lower, and upper band, lower band, and standard deviation. The max part of it we saw. Then we saw what this normal distribution bell curve is. So this is very important concept. Let's try to understand till this.